couple of weeks ago, I talked about the recent stock splits that happened with Apple and Tesla. And since then, a number of you have called us and said, hey, why are there no Apple or Tesla positions in our InvestNet accounts? You see, these are accounts that we manage. Well, you see, we all use Apple products on a daily basis, right? So why wouldn't we invest in it? Whether it's an iPhone, an iPad, an MacBook, or even an old iPod with an old headset. It's hard to escape that Apple tractor beam. So why don't we own a company that we all use on a daily basis? Well, here's the answer. You see, Apple is currently the largest stock on the US stock market. And that means that if you're investing in your work-sponsored 401k plan, your pension plan, or if you own the S&P 500 or any other New York Stock Exchange traded funds, you probably already have some exposure to Apple within those counts and those investments. Now, we're not saying that there's anything wrong with Apple. I love apples, especially to eat. But I do believe that the other companies that we own for you in your portfolio can have better results over the next 10 years as they carry a smaller capital base than Apple. There is the potential that Apple may double over the next 10 years, but that doesn't mean that other companies can't outperform them still. Again, I have nothing against Apple or companies like Johnson & Johnson or Visa or Berkshire Hathaway. What I know is that if you have any accounts outside of us, especially retirement accounts, 401ks, you probably have that exposure already, and there's no reason for us to overlap that. That's referred to as stock overlap. You see, one mistake that I see investors make is assuming that diversification means holding some stocks, some bonds, and some cash. Others think diversification means having more than one investment advisor, though I don't think that's necessary based on our team and our resources, but that's just me. Diversification is about more than asset classes, you see. Once you know your risk tolerance and how much you'll likely need over the next 18 months of life, then you can ask yourself, what are my goals with this money? And the majority of you want to make money with the least risk possible. Makes sense to me. Often in discussions about risk, though, people fail to consider the idea of rampant inflation, which hasn't occurred in the US for a while. However, I do believe that inflation could rear its head in the coming years. Inflation poses a big threat to your cash and your bonds, as they can't keep up with inflation, and they typically lose money daily to it. Now, this is just my opinion, and I've only been doing this for a couple decades. But I believe it's important for investors, and once they've defined their risk tolerance, to look at what's going on in the world rather than focus on perfectly balancing and diversifying their portfolio in the three traditional asset classes of stocks, bonds, and cash. Balance may mean owning a little of everything, but some companies can't raise the prices of their services fast enough to keep up with inflation. So when we invest our clients' families' hard-earned assets, we like to look at whether or not the companies that we're invested in can effectively raise prices to account for the inflation going on in the world. But back to Apple. You might be wondering whether you should buy more. Well, if you have any equity in your work-sponsored retirement plan, like I mentioned before, you probably are buying Apple every time your company withholds money to put into your portfolio. However, if you want to have a discussion based on your situation, just give us a call. We can take a look at those accounts and see how much Apple you actually own. I want to wrap up by saying that if you have any children or grandchildren who are out of college and working that first job or looking for some help building out their first investment portfolio, we'd love to set up a time for a quick phone call with them. Our team can help them start down the road and identify the brands and opportunities they follow. And hey, I might just gain some new ideas too.